Hey everyone. So I know it's been a while since I've done one of these videos, but I want to get back into doing these. So um, wanted to get started by going over currently what I've been looking at for the S&P 500 this week. So I'm going to start with a top-down analysis from the quarterly 3-month interval chart, and we'll kind of work our way down into the setups I've been looking at this week, and just to kind of go over those and my thought process behind them. Um, so let's go ahead and get started. So right now we're looking at the S&P 500 CFD chart, so US 500, and you can see this is on the 3-month time frame. And so you can see here's where we are in Q4 2023. Um, Basically, my target is this 3-month external range of liquidity. So this high from January 2022. Um, and the reason I'm looking for that is you can see we made this high in about a year ago or about 2 years ago. And after making that high, which was a break of this high here from January 2020, we rallied higher. And then once we set this swing high, we then broke lower, returning to internal range liquidity, which took the shape of, you can see here we have a 6-month fair value gap and a smaller 3-month fair value gap. So you can see we came down here after setting this external liquidity high. We returned seeking internal liquidity in the form of imbalance, and then we've been running higher. So um, until we have some type of a shift or rejection lower, this is the target, is taking out this high. So we'll drop down to the monthly so you can see it in a bit more detail. Here's that same swing high from about 2 years ago. We broke lower, took out this swing low, set a new swing high. So, we had a bearish shift here until we got to this internal range liquidity of the 6-month and 3-month fair value gaps. And again, you can see we took out this swing low, set this swing high. So once we broke that and came back down, that kind of sets the target for up here. And as you can see, we've broken this swing high now for December. So we've taken a lot of buy side liquidity. So still the target is set here. So we'll drop down a little bit lower to the weekly. So you can see here's still that same 3-month external liquidity. Here's a weekly and the monthly liquidity, same thing, just kind of increasing the level of detail as we go down. Here's that internal liquidity we hit on the monthly time frames, and you can see we've been trending upwards. So fast forward to where we are here. This starts December. So we started December. We've been bullish. Basically since the end of October, we've been bullish. So um, we took these highs to start December, or after the first week of December, we pushed that. So to this current week, we're still bullish, but recognizing we are in, areas to where, if price for some reason doesn't want to take this external liquidity, we can reject. So just being mindful of we're bullish, but we are prices extended really far with really no pullback. I mean, you see we've had bullish weeks for almost 2 straight months. So to start this week, usually the first target when you're anticipating a bullish week is the previous week high. So we'll drop down to the daily, and you can see here was Monday the 18th. So you can see we opened here, and then quickly ran up, broke the previous week high, dropped back down, and then yesterday was bullish, and today has been bullish as well. So then I like to use the 6 hour because it divides the day into an easy 4 quarters. So this gives you a better view of the week, which is in these two solid lines here. Um, so you can see Monday, we drop down from the weekly open on Monday at midnight. We drop down and we increased. We went up. We took the previous week high here. Actually, I want to take that for keep it cleaner. I took the previous week high on Monday at the end of this is 12 o'clock. This is the 6 o'clock candle. So at 6 o'clock on Monday, we opened, we dropped lower, and then we took the previous week high. So basically, we've been bullish this week. Heading into, let me go back up to the daily. Started the week, previous week high is first target. And as you can see, these teal boxes, like the shaded areas, are daily fair value gap imbalances from all the way back in 2022. So you can see we've got this imbalance here with the dotted line being the midpoint. We've got some liquidity on this high here. And then this dark bordered open rectangle, sorry, excuse me, that is a bearish breaker block. So that, and then here's that 3 month liquidity, buy side liquidity. So to get to this, price this week would have had to break through this fair value gap, this high, and this breaker block. So just to give you an idea of, why I said I'm bullish, but cautious. So again, here's that same fair value gap. It's midpoint. This fainter solid line here is that swing high. And then obviously the dark shaded box here is the bearish breaker, which you can see we are trading inside of right now. So bullish, but expecting price to meet a little bit of resistance possibly. So let's drop down to the 90-minute to get an even more zoomed in look here. So to start the week again, bullish. I have a bullish bias this week. So Monday we dropped lower. You can see here we have this light blue is a 90-minute imbalance. So you can see price for London dropped down into that, rejected higher, targeting the previous day high, the previous week high. This daily buy side liquidity, the midpoint of the fair value gap. Those were all the targets on Monday. We didn't quite get to the midpoint of the fair value gap, but we did take the that buy side liquidity from that daily swing high from January 2 years ago. So that was in the PM session. We popped up, took that, dropped back down. These dark blue shaded areas are actually 6-hour imbalances. So you can see that is this one right here, formed from the midnight candle to the noon candle on Monday. So you see after taking that, price came right back down to this, set this imbalance, and then heading into Asia session, it dropped down one more time, touched it, heading into the overnight. London did a quick drop down, not very far at all, and just continued rallying higher, taking out Monday's high, crossing the midpoint. We did meet a little bit of resistance for about 3 hours right there, and then broke through. And then you can see this dark blue area is another 6 hour fair value gap that if I pop back up, you can see that one is from the Tuesday midnight candle to the Tuesday noon candle. So that 12-hour period, we've got another imbalance formed there. So Tuesday ran the midpoint, ran the previous day high, ran into the breaker block, right at the start of the AM session, and then pushed up higher and higher. Didn't I was anticipating a bit more resistance there, and when we get down to the lower time frames, you'll actually see that I had a sell limit in there that I tried, and obviously didn't work out. And I know that was counter trend, but it was at a higher time frame level of resistance potentially. We had a market structure shift on the lower time frame, so I went in with a small position to try it. So as you see, we kept going higher, higher, higher. Set the high of the day in the Asia session, which took out the PM session high, and then into today's price action. You can see London right after midnight actually took the Asia high and then dropped lower into this 6 hour imbalance that we had shown. So again, setting the stage for, if I go to the 6 hour, setting the stage for right here at 6 a.m., setting the stage for a bullish push higher again, which obviously we got, 6 a.m. right here, it kind of slowed down. 9 o'clock wicked down into that 6 hour imbalance and pushed higher, with the target being the previous day high, the essentially I guess the London opening high of the day, I guess essentially. London high here by this little red dotted line, and then so the top of that daily imbalance is right here back from 2022. So that's kind of my next upside target, is I'm expecting it to close in that, or to want to draw towards closing in that imbalance, and it obviously doesn't have to. And then you can see we've got a 90-minute imbalance formed here that we've inverted, closed above it, and then once this candle closes at noon, this 90-minute candle right here closes at noon, we will potentially have another 90-minute overlapping imbalance. So that could be a area for price to drop down into for another push higher. So I'll be monitoring that. So let's drop down to the 15 minutes so we can see the executions I was looking at for this week, starting with Monday. So you can see here's that 90-minute imbalance that we had mentioned that London session on Monday dropped into. So setting the low of the day, majority of the time, London will set the higher low of the day, depending on if you're bearish or bullish. So you can see we dropped into that, we rejected higher, we tapped it again, took out this 15-minute swing low, went higher. So, we had some entry opportunities here, but that's usually before I start looking to trade. So if we zoom in here, you can see we've got opening bell right about here. So, I was already kind of the mindset that London had set the low of the day, rejected higher again. So I expected a New York continuation. This dark line here is the midnight opening price. So at 9:30, we had another drop down below the opening price, repelled higher again. So once we broke this swing high here, I was looking for entries. So we broke it here, came down, entry number one right here at the top of this 15-minute imbalance. 5-point stop loss takes our stop loss below this swing low. And then obviously the target was just 3R on this one. But as I mentioned, I was looking for this line here, and then the previous daily highs, previous week highs here, which were obviously hit. And then we actually, in the start of the push higher, we had another little kind of imbalance section here after we took these previous daily highs. We dropped back down, so I had another entry there. Um, and actually, it even gave you another entry back down here again, too. Um, so, and then again, going for 3R, this time targeting, which almost lined up with this daily buy side liquidity. As you can see, that was hit again. And then if we drop down to the 5 minute, you can actually see some of these zones a little bit better. I misspoke earlier. These are 5 minute imbalances that I used for entry. And then in the PM, we had the lunch hour. It kind of came back down, dropped into a discount of this dealing range here, because we had a little bit of consolidation here, followed by a push higher. Lunch hour dropped down. 1 o'clock, we came back up. And since we still hadn't reached this buy side liquidity from the daily swing high, I did see this little entry pattern here, which actually formed on the 1 minute. So I did take a quick little 1R trade there, just to take me up because it lined up with this daily buy side liquidity. So 3 entries, 3 executions, you know, 3 wins there would have been good for 7R in total if you held all of those, took no partials, all that. We can see we set our daily high there, so I'm going to back out or stay on the 5 minute actually. So this was at 2 o'clock, after 2 o'clock. So then we kind of consolidated, dropped back down, heading into the end of the day. And we're resting back at this 90-minute, resting back at this 90-minute imbalance here, or 6-hour imbalance, sorry. So heading into Tuesday's trading, again, we had reached that daily swing high, didn't quite reach the midpoint of that daily imbalance. So again, still bullish, but keeping in the back of my mind that we're inside of the daily imbalance. We have the breaker block up here, the midpoint here. All of those are levels that could send price lower for a retracement. So keeping that in mind. So Tuesday's trading opened, you can see here the midnight opening price. London dropped down, wasted no time, basically just came into the Asia range, just kind of went in there, set the daily low, and took off higher. So again, I was anticipating a New York continuation. You can see before the opening bell, we had already taken the previous daily high. So again, this was another thing I noted of that could affect bullish momentum for the day. So I'm actually going to drop down to the 5 minute so we can see this a bit more clearly. So 8 o'clock, so actually at 7:15, we took the previous daily high. And you can see we're kind of working up in here. So now we had kind of touched the midpoint. So again, I was, taking note of all these things that could possibly be affecting the bullish momentum. But, we were within 12 points of the breaker block. So that was my next kind of upside target if we remained bullish. So you can see here at opening, like right before opening bell, like between 8:30 and 9, we rejected lower and then started taking off higher again, took out this high. So we had a shift lower, a run higher. And then right at 10 o'clock, we had a quick spike down into this 15-minute imbalance to have a run at the breaker block. And you can see we did go a little bit higher. So, it was a quick 2R. We had another opportunity here. There was a 5-minute imbalance here. That again, we didn't quite reach the breaker. So I saw it drop down again. We had a bearish order block or bullish order block here. imbalance, price dipped down into it, took another execution there for 2R to take it into the bottom of the bearish breaker. So then heading into, it was, approaching the lunch hour here, 11. So I saw this is what set the stage for me to think of trying to do a quick kind of counter sell. So you can see we had the AM session high here at 11:15. We had a lower low formed. We, right before the lunch hour, took that high and then had a displacement lower heading into lunch. And then, so I took this as we took buy side, we displaced lower, left, a fair value gap here right at a daily breaker. So I took that as I might be able to get a quick scalp back into the London liquidity, the New York AM liquidity. The previous day low is kind of what I was looking at. Maybe price needed to retrace a little bit lower before, potentially pushing higher, or maybe it was going to reject from this breaker block. So you can see I had this imbalance here. I had kind of set the stage of my entry right here on this bearish breaker here, the low of that. So you can see price came up right, actually even during the lunch hour. So again, I kind of made this trade fit, which should have been red flags. Um, knowing that the lunch hour, can manipulate things, and I shouldn't have entered. Usually I don't like to enter prior to 1:30 anyways. Um, So could have entered there, closer to 1:30, it came up and tapped the fair value gap. So I might have ended up entering there anyways. But as you can see, price never fully went bearish. Um, came back up, took the AM session highs with authority, actually right before market close, stopped me out. And again, it was a small position. I lowered the risk down because I knew it wasn't an A plus, setup. But, regardless, you win some, you lose some. Looking back on it now, I can see kind of the things I should have paid more attention to that would have stopped me from taking that trade. So heading into today's trading, we'll go back out to the 6 hour so we can see what we're working with. So Wednesday starts here at midnight. As you can see, we opened, went down, and opened here for the 6 a.m. candle, dropped into a 6 hour imbalance. So to me, that again set the stage for another bullish day. And here you can see midnight opening price dropped down during London and tapped into the 6 hour imbalance. So you can see the London low here was technically swept immediately during the kind of in between London and New York sessions. We had the 90-minute candle here at 9 a.m. open up, drop down, and rejected. So let's drop into the 15-minute to see kind of what I was looking at for today. And you can see this trade idea is still in progress. I didn't get to execute on this because it never gave me an entry that I was looking for. So here we can see that London low got taken at the 6:30 candle. We dropped lower, consolidated, manipulated this swing high here right at about the 8:30 open. We manipulated this high, dropped lower, took the 7 a.m. low, tapped into the 6 hour imbalance. So again, setting the stage for price to take off. So as you can see here, took the low, ran higher, took the high. So I was looking, honestly, I would have been okay with entering. I think I was looking for around here, even to here. And then after that, I kind of lost interest on getting a pullback. But I would have in reality been interested in entering here. Had we gotten a pullback, I would have been interested in entering here had we gotten a pullback. Um, and my entry was actually based off of this bullish breaker right here because I saw it as an up close candle right before a down move into liquidity before displacement higher. So that's what I was really hoping for. But in honesty, I could have taken an entry from any of these spots and been comfortable and still met my risk to reward um, parameters. So as you can see, price took off, got to the midpoint. I was thinking maybe in here, this bit of hesitation, we would have gotten a pullback and then went higher. Didn't get it. The buy side targets for the day were the previous daily high. These relative equal highs here from London. This high that was set shortly after midnight. And then obviously the top of the daily imbalance is my overall target that has not been met yet. So this trade idea is still in progress to see if it fully works out, but unfortunately I was not able to execute on this one. But taking it as a win that, had the right idea, and technically, since my upside target has not been met, technically you could maybe still be looking at the potential to get an entry maybe down here based on the 15-minute, maybe in here somewhere, price returning to a discount. So I'm going to keep my eyes on it for the next 30-40 minutes heading into lunch, and then we'll see what it's doing for the PM session if nothing else materializes for the AM session. But yeah, so wanted to give a quick rundown of what I've been looking at for the S&P 500 this week. I'm trying to get back in sync with the markets heading into the new year, and I hope to be doing more of these YouTube reviews as I kind of continue to study and work on my own trading. I'm not intending these to be any type of advice, targets, or anything that anyone should base any trades off of. As I've said before, right now in my stage of trading, this channel is essentially functioning as a way for me to verbally go over what is in my head when I'm trading, and what I see, and kind of explain my understanding of the ICT concepts that I'm trying to base my trading around, so that if other people are on the same journey as me, or other people that might know more than me can look at my trading and maybe point out things maybe I don't understand fully, or concepts that I'm using incorrectly, or maybe things that I didn't see personally, is kind of my hope. I know trading is a solo sport, but there is a large ICT community of people learning these concepts and trying to implement them. So I think if we can, help each other learn and things like that, I think that's always great. So yeah, again, we're heading into the holidays, so I'm just trying to focus on getting myself in sync with the market. I've had a profitable week trading so far. Couple executions that either I missed actually engaging with, and then obviously I had the one loss trying to go counter trend. So yeah, so let me know in the comments if everything in this video made sense. If you have any questions, comments, notice things I did wrong, things I could have done better. If there was anything in this video that maybe you didn't know before, or maybe that this helped you understand a bit better, I would love to hear about that also. And then, yeah, so I will get this uploaded and talk to you guys in the next video. Thanks, and Merry Christmas, Happy Holidays, Happy New Year to any people that if I don't get another video uploaded before the end of the year. Um, so yeah, everyone stay safe, have a good holiday, and I'll talk to you guys in the next one.